Sure.
So yeah. So basically, maybe some quickly we can discuss about some myths and the hard facts. Okay. So there is a myth, some maybe are related to the individual's mind, right? Um, there are many people. I mean, many of my even close friends, they believe that they are losing. And even in my team also, they are losing. And in my building, there are few traders who has never learned the stock market. I mean, they have learned in a crude way by trying themselves, or they are doing something by the with that. I can say by the via tips. Okay, and they believe that there are some secrets which somebody knows, and when it's got leaked, it's like a paper leak of the IIT or something like that, right? So if that paper leakage is happening, then only they get the tips, and they pay something good amount of money every month to receive those tips. Okay. So, but that is really a myth. I mean, people, it's basically a simple thing. Understanding the technical analysis and how those things, and maybe trading based on if it is, and that your stop losses is also part of that. So it is strictly that, okay, once you, even you are 100% sure, all your conviction is there, but there is a always possibility. Always means there is a possibility that, okay, the market will not go as per your analysis, in some situation. So for to handle such situation, there is a hard stop. It is that we have implemented, or we are going to learn how to put those hard stop. That means the with the stop loss, or with some negative value also, you exit if it is not going to the as per your analysis or the prediction. And the myth is that, okay, only the intelligent people makes the money in the stock market, which is again the not true. Anybody who is kind of following the right process, they will get a reasonably good amount. And again, it is not, this stock market is like any other business, right? So we should not be having unrealistic expectation from day one. We can have whenever times comes. It's like a cricket. Like even the Sachin Tendulkar cannot hit the sixes in all the balls. And there are some players who can hit maybe a sixes, maybe six sixes in over also. But that depends on the situation, timings, many other factors. Okay. And the other thing is, myth of fortune. It's like only lucky or fortunate people makes the money. That is also a and the myth. Under capitalization myth. That means that a lot of people think that they need to have a really big amount, to enter the stock market. But the hard fact is that even somebody is having a minimum maybe 10,000 rupees also, they can start with that amount, and it can maybe on with the 10,000 rupee also, on an average they can make 2 to 3,000 per day. So when 2 to 3,000 per day means around 60,000 to up to 90,000, 1 lakh rupees, just by the investment of 10,000. Um, Especially I can say by trading in the currency market where the huge leverage are there. So on an average, it is very much achievable. We will learn. I mean, by some of the example, we'll also take from the currency market. Uh, yeah, and there is an autopilot. Okay, autopilot means if some people are thinking that, okay, if we have some good trading system, then I would be successful. So there are some auto trading also happening. There are some algos are there, and those accounts you can put thing, but it is not necessary. Like it's like a, or so far auto trading I can see like autonomous cars. So there is no proven thing in the stock market that can be automated, and otherwise there are a lot of banks and the big investors are there. They should not be putting many analysts to do the analysis and trade on behalf of them. They could have done via the machines or robots. So till date, the autopilot is still a myth, especially in the stock market. And again, myth of fundamental, like stock prices is determined by the company's, like, fundamental and past performance, which is not true. The stock market is a mostly it is a sentiment base. Okay, and again aligning with the larger forces. So technical analysis, whatever we have learned and we are going to learn, based on that we can have a very strong conviction at to 90% of uh, you know positive results, and then we can able to take the trade without knowing anything about the fundamentals of the companies. The only thing is we should be knowing some of the blue chip a good company, and that way anyway we learn. I mean, any company listed under Nifty 50 or Nifty 100, those are the. I mean, you can safely assume those are the blue chip companies, and those company list you can find it on the website on Google. You can type companies under Nifty 50 or Nifty 100. There are a few more ways we will learn going forward. Yeah, myth of brand is another one. Like buy only the particular. I mean, there are some traders, especially I mean even the big traders also like Rakesh Jhunjhunwala, and also they are known as very much to the maybe Tata, especially the Titan and maybe a few more stock. But that is not true. I mean, they have the good share I can say in those companies, but they are not like they have invested only in Tata Motors or any limited company. So it depends on maybe your individual choice, like which company you want to choose. It is nothing like only if you invest in only particular company that is going to give you a benefit. Right. So yeah, some hard facts like market. I mean, this is nothing to scare you, but only thing is like um, if you not if you do not follow your own, you're not your own, but whatever the rules that we are going to learn in terms of the targets and the stop loss, there will be a kind of a big accident also. It's like whenever we are learning to drive, okay, so we should be learning how to apply the brakes, how to take the uh, U-turn, or when to take the exit from the any highway, etc. So those rules we need to learn, and we need to be very aware, basically follow, right? So if you don't follow those rules, there will be a maybe you may learn the hard way by maybe losing your money, because losing is the money in the stock market is equivalent to your, I can say, life, right? So yeah, some of the common question that we heard from from the newcomers, basically who are formally learning about the stock market technical analysis, and trying to start trading or investing by their own. So what stock should I buy, and when it is good time to buy? Market is falling, should I sell or hold? Is it a bull market or bear market? And maybe how high or low this stock could go. So these are the few typical questions that we go, and the answer of all these questions lies in within the technical analysis, that and more, I mean, good number of those concepts we have learned as part of level 1, and we will be learning some more advanced concept in the subsequent you know levels. And again, on top of those concepts, if you apply some of the money management rules, that is going to be helpful for us. Okay. Yeah. Some of the questions. Right. Some of the retail mindsets. Okay. Retail portfolio consists of more underperformer stocks than the outperformer stock. So, okay. So basically, retail portfolio means like people like you and me. So mostly what I have seen that when people are kind of trying to do a long term investment, um, and they maybe without, I can say, paying that close attention on the technical analysis part of learning, they maybe try to buy the stocks, maybe some random stock, even they are the blue chip companies, but without doing the proper analysis. So we should not be, even for the blue chip company, we should not be buying at any level. Okay, once we should know that, okay, when is the right time to entry, based on the learnings we had, and then whenever there is a right entry point, then only we should able to taking the entry. We should be taking entries into the market. And what is will be the right point? Then when we learn about the application, we should know a little bit better. Right. Trends that we have already understood: uptrend, downtrend, sideways trend. Bulls, bears we know, oscillators we know, downtrending and uptrending, bullish divergence, bearish divergence we understood. Time frame, monthly, weekly, daily, intraday, that also we learned. Yes, so there is a, yeah, this is the one nice representation which I found that basically whatever the learning, that the concept that we have learned, okay. So when, I mean, it is very, very important for sure. I mean, there is no doubt about that. But it is going to, give you kind of a, 30% of your, overall contribution. Remaining, I can say 70% are distributed in between money management and mind management, basically. So money management is again the other one which we need to pay some attention. Okay, so I mean, how much stock, I mean, how much to invest, and all that we are going to learn during the implementation session. Maybe I'll see if we can able to cover today itself. There is a method. Okay, so let's spend some time on a method. So method has the, couple of I can say the additional guideline, which is like a, first screen. First screen means when we are doing the, technical analysis, and so what are the things that we should be checking? Okay, so the first screen, that is a long term view, and as I said, that the MACD basically. So MACD, we should be checking a higher time frame. For example, we are doing the investment and trying to buy the stock in a daily time frame. MACD, we should be looking at a weekly time frame just to identify what is the main trend of that particular stock, and that is also it is called as a direction indicators. That means the main trend, it is uptrend or high, downtrend. The second screen is again the medium term. That means maybe the daily or, 4 hourly, depend on the, what kind of. So just let's take example of the long term investment. So second screen means the oscillator. We should be looking at the medium term. Okay, and this is it's against that tells that, okay, it is the market is again, it is a, uptrending or downtrending market. Okay, so there are the third concept is also there, which again, um, maybe some of the intraday or the very, very, you know people who are investing in a very short period of time, maybe typically intraday trader, they can use the third screen also. And again, it gives a uh, conviction, even the lower time frame also, what is happening. For example, any uptrending market is there, and in between there will be some correction. So the correction will again, you can able to see in a 4 hourly chart, and then a hourly chart or 15-minute chart. I mean, sometimes a 5-minute chart, right? So when your the oscillators are kind of moving somewhere near the, downside, maybe 20 or below 20, and then when you look at the chart of 5 minutes, and when it is starting making a positive up move. So if you are an intraday trader, you can also go to the lower time frame to have a better conviction. And again, this is again we are going to repeat and learn when we do the implementation of the different. So we will be covering the various topic, various time frame implementation, the daily one, long term investment, a positional trades like from couple of hours to couple of days to couple of weeks, and then definitely there is some intraday also. So various example we will be covering into the implementation session. As of now, just try to understand, okay, what are the various things we will be checking, and how these double or single screen and double screen method is going to help us in for a better conviction. Okay. To determine the entry, again, the use the triple screen system. Triple screen system means we are checking different things in a different time frame. by using the different indicators like MACD, RSI, stochastic, etc., etc. Right. And okay, so same thing, determine the entry, we have certain things, and similar to determine the exit also, we are having the some more concept, and those concepts we have already learned uh, so far. Choosing the stop loss. Okay, how to choose the stop loss? That, for example, um, if it is a we are doing the short selling, so based on the support, even short sale or for long run. So based on in the one line, we can say based on the support and resistance, typical the stop loss is going to to be decided. And again, I mean, once we try, doing the trading by ourselves, we will understand more. So stop loss is the kind of, if I take a simple analogy, it's kind of a when to apply the brakes, right? So in general, I can say that whenever there is a traffic, apply the brake, but there will be multiple conditions. Sometime some sudden objects come, sometime the cow, buffalo, or the bulls will come in on your way. Sometime maybe an old man, or sometime kids. So basically, when I say that, I mean there won't be any fixed criteria. There may be a lot more condition, but in general, whenever you find there is a possibility of accident, use the stop loss. Oh no, okay. And when we start trading, maybe that experience or that conviction, or it will be better by yourself. But in general, we are going to definitely learn at what will be the factors or criteria to be considered while putting the stop loss. Okay. The second part was the money management. So what is means that people ask the question how much money we should be investing into the stock market. So based on my gurus with whom I have learned, they have given us simple rules that okay, uh, deduct your age minus from 100, and whatever the percentage comes, maximum that percent, that will be your total investment should go to the stock market. So for example, if you have a maybe 10 lakhs, okay, uh, for the investment purpose. So stock market again, and if your age is let's say 40 years, that means maximum 60% of amount you should be keeping it for the investment or trading in the stock market. Remaining 40% of your saving that you have kept it for your investment purpose, you can choose the other traditional ways. Maybe buying the physical assets, maybe metals like a silver, gold, or any other house, or no, house is not investment basically, uh, land or any other, or the I can say mutual fund or anything, any other things. So maximum 60% you can put in the stock market. And again, the number of companies in a particular portfolio, so maybe I can say 5 to 15 maximum. Why maximum 15? Because it will be difficult. I mean, if you put lot of companies in a stock, it will be difficult to manage them, because even if not at a regular interval, at least from a weekly basis, you need to open the stock, open the chart, and need to look at that. So no, 15 will be a really, really big number. So I can say maybe you can, if you're building your portfolio for investment purpose, start with maybe 5 or so. And then maybe after a couple of months or so, you can maybe reach up to 10. But any point of time, do not have the more than 15. It will be really, really difficult to manage, because I know once you are taking the entry, we also need to take the exit, right? Distribution. So how much money you can put in each companies. So I would say based on my experience and whatever I have learned, I could say based on this one 8 to 20%. Suppose for example, if you are choosing the 5 companies, then 20% straightforward. If you're more than that, then percentage will keep on. So number of, I can say the percentage will be depend on the number of companies, and based on that you can decide, right, how much percentage to distribute. Stop loss for each stock. Okay. So whenever you are taking a trade or doing the investment, so your individual stop loss should be less than 2% of the total portfolio value. So total portfolio means if you are um, your portfolio is maybe I can say 10 lakh. So and say that okay you have 10 companies. So that means for each company you are investing 1 lakh rupees. So 1 lakh rupees means your maximum stop loss should not be 2% of the individual. That means your out at any point of time you should not be losing more than 2,000 rupees. That is what it says. Okay. Yeah, same thing for the intraday trader also. Same methods applies. 2% rule. So your maximum risk should not be more than 2%. That is how you should be putting a stop loss. Or and what other way it means that okay, if you're not conviction is not going in the right direction, and if it is moving in the opposite direction, whenever the stop loss, that means for example, any stock which has the hundreds, sorry, 100 rupees, and any point of time it is falling in a other side, it is not going to moving in your direction. Simply exit whenever it is touching your stop loss.
Why you're saying this 20%? If you have 10, your max loss should restrict to 20%.
So, for example, if you have a 10 stock and okay, this is an example, right? So if you suppose that you are having a really bad day or bad week or bad month, right? If you are using this 2% of the maximum loss, that means you are exiting your position with maximum loss of 2%. If and suppose you are losing in all the stock, all the investment. In that case, your maximum loss will be 20%.
No, it will still be 2%.
To okay, so of the your total portfolio value. Correct. Right. So um so 2%, yeah, for the against the total. Yes, you are right.
And it's actually weighted average,
Correct.
but it will
Yes,
not be 2 into 10.
yes. Yeah, so I think this is the my bad. So basically, I mean the main fundamental to learn is that why 2% restriction is that even if your trade is going, hitting your stop losses, it is restricting your losses basically. And then maybe after you can take a rest for the day or for the week or for the month, and you can do a first analysis and again start trading. Because a lot of time when when we are new, I mean, uh, um, if you remember the day we learned about the bicycling, right, or maybe the initial days of riding scooters, I'm sure we have slipped basically on the turn. Okay, I mean I did couple of times. Whenever there's a turn, and then bicycle is to skip because we are not applying the brakes. We are running on the same speed. Same thing happens with the bikes, and same thing happened with the stock market also. So that, and this is applicable, or always applicable. Just practice, because sometimes it is not going in our direction. People start living in a hope that okay, yes, it will happen, because it requires a practice that okay, we need to, if sometime if the losses are happening, how to exit with the losses. So it's better to exit with the smaller losses rather than waiting for a longer period of time and look for the bigger losses, if that is the situation happening. Yeah. And the third concept was related to the mind management. Okay, so mind management is again is kind of a, it's a feeling basically. So what people sometimes, people thinks that okay, maybe today, they predict the candle formation basically. This is what it is going to happen. But what only we can do, we can only manage our entries and exits. We cannot predict the market as a whole. No, because there is a managed market is managed by the larger sentiment. Other means many big forces. Right. So our main focus would be that okay, do the technical analysis, try to identify the main trend, take that the entry, and if any point of time it is not happening, just exit the position, maybe take risks rather than thinking about too much. And which it does take some time, no? Once you start trading by yourself, I think it will take maybe a couple of weeks to couple of months, depending on how good you are at your own mind management. Capital preservation and money management, that is what we have learned about the, by, having the strict stop losses, we can do the capital preservation and the money management both. Self, there are some kind of a, we apply the pressure. I mean, I know there is one of my colleague, and so we are having this official meeting, and that out of official meeting, she started sharing about the habit of her husband. Okay, that guy, he's a good guy. I have discussed with him. He called me one day. But the thing is, sometimes the day, I mean, he makes the good money. I can say 50% of trade. But the problem is that 50% of trade, he really lose the money, and really lose the money means he wipes out the profits plus as equivalent or more money out of his pockets, right? Because when his trading is not going against as per his conviction, he kind of takes the revenge trading. That is what I term it revenge trading means. He tries to fight with the market, which is not a healthy way of doing the trading. That means on that day, because of something, you are not able to do the analysis, or market is really, really, nasty. So better if it is not going to, your way. And somebody, if you are doing the maybe especially the future and option, and there are a lot of people who do the future and option. I know some of the good professionals, even the doctors, they take a leave on Thursday, because Thursday is the expiry date. And when we learn about future and option, we can understand better what I'm trying to say. Because Thursday, a lot of uh, market movement is happening, and those guys take the leaves on Thursday and just to do the trading, because Thursday is the weekly expiry date, if you know. So revenge trading is not a good habit. I know the pressure that, okay, yes, I must be succeeding and there should be a good money today. I will be at least lakpati, or end of the month, or maybe end of the year I'll be crorepati. So if that kind of mindset is not, I can say, a healthy way. The only thing that we can control is the learning, and based on the learning, taking the trade. And again, exiting at the right time. Either it hits the stop loss or hit the uh, target. Another thing, what I have seen, that whenever we are I mean, typically when we start trading initially, whenever people are in a red, they live in a hope and then wait for a longer period of time. But whenever people start making the profit, they exit, I can say, in an immature position, without hitting their, I can say, the targets. Okay. So they take exit with less profit, and they remain in the trade with the more losses. That is the other um, observation I had. And again, not enough education in the other way. So money does not make the trader; it's the traders that makes the money. Okay, so it doesn't matter that, okay, how much big money. I know one guy. I mean, when I was doing the one guy, one Indian guy, and he was a son of big businessman. So that guy shared the story. So just over the 6 month or 6 to 8 month, he uh, lose around 3 crores. That's a big money. And what that guy used to do is, that guy got into a trap of tippers, and he used to trade based on the tips, and used to put huge big money in the futures and options. And every time, see, he puts a more money. It's like a gambling, that, okay, now because this time I got a better tip, and it is going to happen this time, and that way, when he lost that much amount, and after that he started learning. Somehow he realized that, okay, no, he should be learning, because somehow, in his heart, that, okay, he should be doing the trading. But he started kind of initial with a tip which works, but after that, it went to the negative direction, because he don't know what he was doing. He was just only relying on the tips. Okay, so yeah. few, and again, M3 rules: never count your profit unless you are not in the trade. Okay, overconfidence can kill. Don't let winning spoil you. Okay, so in a both the situation, whenever you made good money, if you're doing some day trading, also any fine day, and if you made a good money or some money, better, it is always recommended don't trade on that day. That is what the rule I made for myself, and it works for me. And whenever I have made an entry again, it's kind of a went wrong. So after a certain point of time, I stopped. I strictly follow the rule. When I exit means exit. After that, also market will go up and down. It may be showing few more pseudo profit, but you can be remain confident. Okay, that much money you have gifted to the markets or to the others. In that is the better way to be a more calm in that way. Don't risk don't increase your risk after the winning trade, right? Stop loss has to be based on chart, not based on the money management rule or the method rule. So whatever the chart or analysis saying, ride your winners, don't jump off the running horses. Okay, what it means that, okay, whenever you are making profits, wait for your right target to achieve. Okay, don't jump off in between that. Okay, yes, it is going on, and you see some green or few thousands, and you are just jumping off. Better to have a full ride and let it reach your target. Withdraw your profit regularly. Okay, so I mean, whatever the money that you have, maybe for learning purpose, like maybe whatever the money, maybe 50,000, 1 lakh, or whatever the money you have, you can think of whatever you are trading. Trade with your, I can say, the principal amount, whatever the profits that you are making, maybe you can withdraw it regularly, put it some different accounts, and then trade with the your principal amount. Don't expect every trade to be a big winner. Sometime it will be. It's like a cricket. At some balls there may be a success, but some balls there will be a single run. At some ball there will be a no run also. But only thing is we need to focus. We should focus on being on the crease, and being on the crease means we should not be losing in a big way. Okay. Yeah. So there are just few more things. I think if it is these things, if you interest is it is interesting, or if it is looking interesting, you can go to the company those two recordings, 1 hour each, and there are I just explain same thing maybe again and again, sometimes repetition, because those things are, I can say, really really important. It should engrave to your mind. It should not, there is nothing concept wise, but basically those how to overcome those feelings, and there are soft things are there that were being discussed. Otherwise, largely I have covered the gist of those 2 hour session as well, as part of this quick revision. If there